Well, good afternoon, everybody, and a warm welcome to all our members to the first annual meeting of the University of New South Wales Professorial Superannuation Fund. My name is Mark Blair, and I'm the Executive General Manager of the Superannuation Trustee Office, and I'm also a Director of your trustee, that's Equity Trustees Superannuation Limited, or ETSL, and I'll be your host for today's meeting. So off screen, but also with me today, are all of the other directors of the ETSL board, the auditor of the fund, that's James Oliver from Deloitte, and the actuary of the fund, that's Saffron Sweeney from Aon. So our meeting today is scheduled to go for about 20 to 30 minutes. We'll have a couple of presentations followed by a question and answer session at the end. The trustee directors, the fund actuary and the fund auditor will be available to answer questions which are either been submitted up to today or lodged online during the meeting, time permitting. Now, before we commence the presentation, just a couple of housekeeping issues. So should you be having any technical difficulties, please call Redback, it's our webcast provider, and the details are on the slide that you can see. And at any time, as I said, during today's meeting, you can lodge questions online. Just click on the blue hand icon on the right-hand corner of your screen. Once you've done so, simply enter your question and press submit. And now the disclaimer is obviously the information we present you today is general advice only. Doesn't take into account your personal objectives or financial situation. If you'd like that, then you should see a financial advisor for personal advice suited to your needs and objectives. And please contact the fund's customer service team, again on the number on the slide in front of you, for further information. So I want to spend a few minutes talking about the role of the trustee. So ETSL is appointed as the trustee of your fund, and we're in the business of acting as an independent trustee, and importantly, that's all that we do. ETSL is part of Equity Trustees that's been acting, or has been in the business of acting as an independent trustee since 1888. And ETSL is responsible for the supervision of your superannuation fund, its investments, its insurance and operations, and ensuring that the best interests of members are put first and met. We've got a team of specialist people within our superannuation trustee office who supervise each aspect of the fund operations, ensuring they're performed properly and within our risk tolerance. Our key responsibilities as a trustee include oversight of the fund and ensuring at all times the fund's managed in the members' best interests, ensuring that the fund meets its regulatory obligations, and appointing, managing and reviewing the performance of service providers and investment managers, and also taking action where underperformance is identified. If we look back over 2020, it was obviously pretty much unprecedented for most Australians, bringing uncertainty, fear, personal loss, and also hope as we've lived through this pandemic. And it's at times like this that our role as trustee is ever so important to ensure that all aspects of the operation of the fund continue and that we quickly adapt to meet the concerns and needs of our members. So during this period, we have ensured that all of the fund service providers continue to deliver their required services. And that's included adapting to remote operations and also altering the methods by which we accept forms, identification, sign-offs to be able to support the members in the current environment. Superannuation fund performance was also subject to significant volatility as Australia moved at the beginning of 2020 quickly into recession, and then as the economy contracted during the lockdowns, and now as the economy starts to reopen. So again, our focus is to ensure that your superannuation fund is sustainable for the future. And that means the fund's invested appropriately and in conformity with the fund investment strategy. Its service provisions meet the needs and expectations of you, our members, and that economically it's got adequate scale and remains viable to continue operation as a standalone fund. So let's look at the fund in just a little bit more detail. The fund is relatively small compared to the rest of the industry's defined benefit fund. It's got 77 members at the end of 2020 and total assets of $33 million. All but one of the members are active pensioners and with an average age of 83 and annual pension payments in total of almost $4 million per annum. Importantly, to ensure the ongoing financial position of the fund is maintained, contributions continue to be paid by the university as the employer, thereby maintaining a satisfactory financial position. And a recent review of the fund's investments has resulted in some changes to the investment strategy, with the majority of money is now invested in index funds with Vanguard, while maintaining a small cash buffer to enable the payment of pensions. So in conjunction with ETSL, there are a number of other service providers that ensure the successful delivery of outcomes to you, our members. And it's our role as a trustee to act on your behalf to ensure they provide a quality service and at a reasonable price. And the slide on the screen describes who those organisations are and the role that they play. And just before turning to that, the important point here is that the trustee is completely independent of all of those parties. So we've got IRES, who are the administrator, and they hold the record, they answer calls and respond to inquiries and implement all transactions. KPMG, they're the asset consultant of the fund, and they provide advice to the trustee on the fund's investment strategy. Deloitte are the fund's auditors. And last but by no means least is Saffron Sweeney from Aon, who is the appointed fund actuary. And that's a good segue to pass over to Saffron to provide an update from herself as the fund actuary. Thanks, Saffron.
Thank you very much, Mark. As Mark mentioned, I am the appointed actuary, and I have been since May 2018. Now, there's a appointed actuary has a number of roles, but the main aim is to serve members' interests by ensuring the financial solvency of the fund whilst meeting all relevant regulatory and legislative requirements. My team and I value the liabilities, which are the pension payments and expected expenses. We project these and then come up with a present day value on a quarterly basis. As we are projecting into the future, we need to set a number of assumptions, such as the likely investment returns on the assets, and also rises in professorial salary, which is used to determine the pension payments. We determine what the funding position is by looking at the liabilities and current assets at the annual and triennial actuarial investigations. There is something called a shortfall limit, where assets can fall to 97% of liabilities without needing urgent action if the situation relates to investment market movements and is expected to get back to 100% within a year. However, if the position is worse, then immediate action between the investigations is required. The contribution recommendation is reviewed on a yearly basis to ensure that the assets and contributions will be adequate to meet pension payments and expected expenses. The most recent recommendation was that the university pay contributions at a rate of 0.3125 of professorial salary per quarter from 1 April 2021. The appointed actuary also provides the administrator with information to complete quarterly APRA reporting and is required to report to the trustee and the regulator in certain circumstances. The most recent actuarial investigation was an annual investigation as at 31st of December 2020. We were able to confirm that there is a high probability that the 76 pensioners currently in payment will be able to be paid as required under the fund's governing rules, once considering the assets and recommended contributions. The expected future pension payments of $29.5 million and the present value of expected future expenses of $1.9 million, resulting in total liabilities of $31.4 million. We then look at the index of assets to pension liabilities. That is without considering future expenses, firstly, to compare to the shortfall limit, and the fund was sitting at 110.3%, which is comfortably above the 97%. And we also looked at the total liability index, which was also healthy at 103.5%. And with that, I would now like to hand back to Mark Blair.
Okay, thanks very much, Saffron. That brings us to the end of our presentations and leaves us with time to respond to some questions which you've provided. And I should note that we'll answer them now, but we will provide answers in writing as well and post them online within 4 weeks, along with the minutes of this meeting as well. Clearly, we can't answer questions that relate to members' personal account details for obvious privacy reasons. So I'll go to the first. We've got a few questions. I'll go to the first question, and that is, are there any financial concerns over payment of pensions? Are all contributions being paid? And Saffron, I think that might be a question that you can help with.
Yes, thanks, Mark. As mentioned earlier, the funding position of the fund was quite healthy at 31st of December 2020. And as investment markets have continued to perform well in the year to date, I expect that the fund will still be in a healthy financial position. I can also confirm that contributions have been paid by the university in accordance with my recommendations.
Okay, thank you very much. So we've got another question. On page 6 of the annual report, the fund's 5-year compound average return between 2016 and 2020 is recorded as 7.42%. The question is, how does that compare with median returns of conservative and growth superannuation funds? Saffron, again, I'm going to pass to you.
Yes. So, of course, investment returns are important for the assets of the fund and are reviewed by the trustee on a regular basis and part of the actuarial investigation on an annual basis. With returns, it isn't actually a direct impact on the members because the members of this plan are pensioners, and it won't impact the benefit that they are paid, as that hasn't got any relationship to the return earned. However, it does obviously impact the assets and therefore the amount of contribution that ultimately the university may need to pay in order to meet the pension expenses and pensions and the expenses. We might need to come back to you. Actually, we don't have the information right in front of us as to how the fund compares with the other funds or the returns of the market, but we can answer that in our response on the web.
Okay, thanks again, Saffron. And the final question we have, I'll read this out, is what steps have been taken to ensure the professorial salary used for pension calculations is adjusted correctly and in a timely manner? Saffron.
Good question. So on a regular basis, the information is provided to us on a quarterly basis. So the actuary does review these as we get data from the administrator. I understand that the university provides the information to the administrator on a fairly timely fashion, and we then check it against the governing rules of the fund when the increases are required to be made, and we then check that it's correct for individual members rather than just on a total basis. So you can be assured that it is being checked independently of the university.
All right, thank you, Saffron. So that's all the questions that we have today. And to those members who have submitted questions, the board would like to thank you, and we hope that we have addressed them for you. I say we, that should be Saffron has addressed them for you. Thank you very much for your time and attendance today. We hope you found the session useful and informative. As I mentioned, the video of this meeting, together with the minutes and written responses to all the questions asked, will be available on the fund's website within 4 weeks. So once again, thank you very much and wishing you a terrific day.